Good morning, guys, and welcome to your market report. Anyway, today is Wednesday, June 20th, 2018, and listen, welcome to the show. First thing we're going to do is start the charts right here, and we're going to switch over to the silver price. Absolutely sick. That's really 1627. They've driven it down to the lower end of the lower range right now. So it's right on the price, really good price to accumulate as far as I'm concerned. I mean, that's not financial advice, but doggone, it's looking good, you know. Now, Bitcoin today, right now, 67.46 at Bitstamp. Now, why I got it on this section of the chart, right here is you can see this when it made a low, 61.20 at Bitstamp. Now, calculating from that low to where it is now, what we've been seeing is we've been seeing a very, very, very slow rise in price. Now, you'll see that ever since that low, it made a low on, what was the date? I can't exactly see the date, but it's not very long ago, just a few days ago. Made a low of 61.20. What we're seeing is we're seeing a little bit higher highs and a little bit higher lows ever since then until now. But that doesn't mean that it couldn't suddenly drop and we have because it's very, very, very been slowly rising, but oh so slow. That doesn't mean we couldn't have a spike downwards and make a new low. And that's the tendency, I think, right now, because if you take a look and go out to, say, the 12-hour right here, you can see the tendency is that we're making just the opposite of the chart I just showed you, which was higher highs and higher lows. This is just exactly the opposite. We're making bottoms, see? So this was that little bottom I showed you right here at 61.20 or whatever. And I just showed you from here to here. Now look, that little tiny spot right from there to there, that's where I just showed you, right? Which it is going up a little bit, but the tendency overall, when you take a look at this longer term chart, the tendency is downwards to new lows. And so more than likely what we're heading toward is it going to make another bottom. Now, how low is that bottom going to be? And this will be the second bottom it's made. Typically, it should probably make 3 before we go back into a bull market again on Bitcoin. Okay, so now taking a look at the Dow Jones Industrial Average. Today, we're up 59. Oh, let me refresh the page. We're up 60 points on the day. That's no big deal. But we're following this range we've been following ever since going back to February 8th. We've been on a range of around on a mean average of probably somewhere around 24,500 roughly. And we're not staying far off of that. Right now we're at 24,759. And this market has just been going sideways. Okay, so now let's take a look at oil. Oil is 65.87, and oil right now is starting to tread sideways. The same as the stock market. So we got 2 markets here that are treading sideways. No, actually 3, if you count silver, and actually a lot of the markets are right now they're treading sideways. Let's go to cryptocurrency market capitalizations. $286 billion. Bitcoin dominance rate at 40%. And we're seeing red numbers all the way across the board. Litecoin's 97.95 right now. My tendency is to think that Bitcoin is getting ready to make a new bottom, which would mean a price drop, a sudden drop in price of maybe as much as 10% or so, you know. And then it's going to make a new bottom, and then we're going to see the price go back up again. This will be the second bottom. Now, I'm thinking 3 bottoms before we go back into a bull market. So it's going to give you ample opportunity to invest is probably you're going to get your cheapest prices at the third bottom, or just after the third bottom, when we're ready to go back into a bull market again on these things. And you might be surprised at how low it might go. But then again, on this kind of a thing, don't take this as financial advice, because you cannot count on this happening exactly the way I'm saying with these cryptocurrencies. Bitcoin has always been unpredictable. And so anybody that says that they can actually predict where Bitcoin is going exactly is not giving you good advice. So I can't predict exactly where this stuff is going, but I think personally, this is my personal opinion, that it's going to make 3 bottoms and then go back into a bull market again. If we could know where that third bottom's going to be, well, then I can make you a Bitcoin millionaire, like that guy comes on there. I can make you a Bitcoin millionaire. What color you want your Lambo? I'd be just like him if I could predict exactly when that third bottom is going to be, and it's going to go back into a bull market again. But you don't need that knowledge if you accumulate a little bit to a time and you hold it right on through until that bull market comes back again. Really, that's a strategy, just to accumulate, and no matter how low it goes, ignore it. Ignore how low it goes. If you can afford to do that, if you can afford to put a few bucks away every month and forget about it, and just basically HODL it, and forget to even have it, accumulate that way and cost average all the way down to the bottom from here, and then just hold it for like however long it takes until she goes back up again. That's probably the best strategy in all of this, and just not to worry about how low it goes in the interim. Because say you bought in right now, let's just give you an example. Say you bought into Litecoin right now for $97.95. You bought a Litecoin, a whole Litecoin, right? The price might go down to $30. Seriously. And if you just don't let that bother you, if you just say, well, heck with it, I did it, so what? And you hold it, and when it's down $30, you still hold that one Litecoin. That Litecoin might go back up to $1,000 later. If you're really smart, buy another one when it's at $30. So then you'll have 2 when they go back up to $1,000. That's the smart money. The stupid guy is the guy that buys right now for $97. He holds it until it's $30, and then he goes and he sells it, right? And then it goes back up to 1,000, and then he's beating himself. That's what happened to me. That was really not a smart thing to do, for me to lose my Bitcoins when they were like $200. And I learned a lesson. I got burnt. I learned a lesson. I learned a lesson from that. And at this point, I'm not going to make that mistake again this time. I'm HODLing this time. So that's the way that goes. Let's go to bonds and rates right now. See what they're doing. We got all the bonds starting to move up this morning. Just in the last few minutes, they're starting to go up. But I don't think they're going to go up substantially too much, too fast. And the reason why is because at the end of the month is when they're really going to start to go up. Right now, they're still on this sideways maneuver, up and down a little bit. Probably not. The U.S. 10-year is probably not going to go over 3% right now. Not until the end of the month. When they raise it 10 billion more, on top of the 30 billion they already have, when they're going to raise it to 40 billion at the end of the month of reverse quantitative easing, of this quantitative tightening, they call it, which is quantitative stupidity. At that point, that's when the U.S. 10-year and the U.S. 30-year and all these long bonds, the 5-year, the 2-year, all of them are going to really go up. So the yield curve is not going to invert, as a lot of people think, because for the yield curve to invert, what would have to happen is these long bonds would have to stay low, and the U.S. short term would have to continue to rise. That would invert the yield curve. I don't think that's going to happen. That's why I haven't been worried about that all along. A lot of people have been saying, "Oh, the yield curve's going to invert," and I haven't been worried about it. Why I have not been worried about it is, even though the Fed is raising rates, is because I know that the long term and long bonds are going to continue to rise faster than the lower end. And so we're not going to get this yield curve inversion. What we're going to get is we're going to get exploding yields. And this is going to bring down the United States economy. This is going to put us into a recession, but worse, it's going to put us into a 2008 shock crisis. And this is what we're waiting for on this channel. This is what we know is coming. We know this is coming. Okay, so the U.S. dollar index, 95.04 today, you know, which is it's on a rise. It's rising, and this is the reason why they're starting to panic a little bit, and they're imposing these trade restrictions. Trade war is on. The trade war is on because the dollar is rising, and they're trying to stem off this rise in the dollar, and also so that they can raise rates further with the Fed, and they're trying to keep this game going a little bit longer, basically, and the only maneuver they have left is trade war. This whole thing about it's because of intellectual property or whatever, I don't buy into that. They gave all these intellectual properties away freely when they wanted to make money on one end, and now they complain on the other. No, that ain't it. What it actually is they're trying to cool off the dollar. The dollar's like on fire, and they're trying to throw water on it. That's what they're doing. Now, let's talk about Craig Hemke for a minute. Craig Hemke has done Craig Hemke on Greg Hunter here has done a phenomenal interview. Now, here's this guy I told you about. I can make you Bitcoin millionaire. Ooh, ah, ooh, ah. There he is right there. I think he's hilarious. Every time I see him on there, I mean, I have to have a little chuckle. Anyway, besides from that, Craig Hemke's got an interview here on Greg Hunter today, and I was listening to it just before I come on the air. And there's one specific spot in the interview where he talks about how they have created quite literally hundreds of times. I think it's in silver, I think it's 400 times, and in gold it's over 100 times the amount of the physical underlying asset in paper short contracts and the paper assets and paper exchange traded funds and et cetera, et cetera, et cetera. And he brings out the point that when you buy real estate, you don't expect to just get a paper real estate, a piece of real estate on paper, and that they would divide up the real estate in the country 100 times more than what they actually have, but only give it to you on paper. So in other words, over 100 people out there would own the same deed to the same piece of property. I mean, that would be absolutely ridiculous. So why do they do this in the paper, gold, and silvers market? Because there's going to come a day when everybody's going to want their real gold. And the only guy that's going to have it is the guy that actually has it. So the price of gold and silver is correlating to the paper contracts that show that we have more gold and silver than what we actually have. And he brings this out so well in his the way he words it. He words it so quickly and so easily in his interview. It's so good the way he does it. You got to head over there and take a look at this interview by Greg Hunter. I'm going to play about a 20-second snippet of it right now to end my show. And listen, we'll catch you guys tomorrow. You guys have a great day, and bye-bye for now.
Everybody listening to us, when you transact for land, and land costs are going up, agricultural land, real estate, and all that kind of stuff. Nobody's buying land derivatives, okay? Nobody's buying just simple land exposure or art exposure
or land ETF.
Exposure, okay? They get the real damn thing, all right? In gold and silver, in the precious metals markets, nobody owns the real thing. All these investors own garbage. They own fake derivative exposure. Almost swore.
You can say